Deferred revenue can be both a boon and a challenge for a SaaS company. So in this video, I want to outline 4 key ways that deferred revenue can impact your business for better or worse. So the first one, the most obvious, is revenue recognition. We have compliance with the ASC 606 guidelines that need to be understood and followed. Selling prepaid subscription services means you're creating deferred revenue, which is a liability. And so you need a strong understanding of these accounting standards just to stay in compliance, to make sure you're recognizing revenue properly. Number 2 is cash flow management. Getting paid up front can be an absolute blessing when you're looking for funding, but you have to be smart about it. Remember that this same pot of money has to last through the lifetime of this customer's subscription. And because they've paid up front for it, you have to budget and allocate resources accordingly. You have to make sure that you can fund operations and deliver on the services that you've sold. And this means more than just knowing how much money is in the bank. It's knowing what the inflows and outflows will be over an extended period of time so that you have confidence in that story of the numbers and how that cash flow is being managed, which brings me to number 3, which is investor perception. They're very curious about that cash flow management as well. And they typically love deferred revenue because it's a strong indicator of future earnings as well. But they will be looking at deferred revenue trends. They want to see if your customer base is growing or shrinking over time. And that brings us to number 4, which is one that's often overlooked, but it's the potential for deferred revenue to skew your metrics, your reporting, your KPIs. Just as improperly recognized deferred revenue can throw your business out of compliance, miscalculating KPIs based on deferred revenue numbers can paint an inaccurate picture of your company's health. It won't line up. It won't make sense. And it leads you to making uninformed decisions, sometimes worse. And so, in short, upfront cash is something every company would love to see. It can be a real blessing, but just like blowing your whole paycheck right at the beginning of the month and then needing to run through the next 30 days, SaaS companies need effective cash flow management to prevent deferred revenue from becoming a liability in more ways than one.